So do you struggle to find those reversals in the market? Then I'm going to help solve that problem for you today. Not only is this strategy going to simplify the method, it's also going to give you high probability trade setups at the same time. So let's head over to those charts and find out more on this strategy. So this strategy I call my trend line collapse strategy. Now all you're actually using here is a trend line and the use of a line chart. We're not going to use the candles to even look for that reversal. The only time we're going to start looking at the chart, there's a price chart, is to mark our areas of supply and demand. So on the Euro USD 4-hour time frame chart, and let's look at price what's on the chart right now. Let's go to a line chart first. And the idea of this strategy is we're looking for the market to create the swinging pattern in the market. Let's just change this to a black. And what we need to see here is when we're marking out our trend line, we're looking for those points to hold. And at any point, if we see the market coming back down, breaking the trend line, it has to then also break this low. If we do not continue to break down, and we actually see from here a reversal back up, that's a continuation in the trend. That is not what I class as the trend collapse strategy. What we actually need to see here, remove that and do it again, is we actually need to see a bounce in the market like this and a continuation down, breaking through this area in the market where we can look for a pullback to an area of supply for entry to continue to downside. That is the whole process of a reversal from a bullish market to a bearish market. Now, the same is going to be when we're looking for the opposite. When we're looking for let's go back to that drawing tool. When we're looking for a bearish market to turn into a bullish market, this is going to be the pattern. So we have a trend line drawn down here. We're seeing the break of that structure at the same time, leaving our new area of demand. That's where we're going to look for that entry. And that's where you're going to have your highest probability trade setup. Once you understand the use of the trend collapse strategy, it's going to help you with your supply and demand trading. So let's start going through this price chart. Yes, I know it's in hindsight, but you apply this in real market conditions, back test it, demo trade it, and you will see how well this is going to work. So first thing, let's look at price from this area here when we see the reversal. Well, we can witness that from this area here, we have a higher high in the market. That means that we can draw a trend line. So if we actually come all the way back to here from this swing low, let's say, then we can actually draw a trend line like this in the market. Now, at this point, what I want to demonstrate is when we bounce off this area, okay, do we go higher? Yes, we do. We need to see a continuation to the upside. Now, I'm talking about a break structure here with the trend line, not those candlesticks. The close price is what's important to us here. Now we go through the trend line, but do we break through this low? No, we don't. So we continue with the trend line. Once we break structure again, we place a new trend line on the chart. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you my free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate more profits and the steps to building a profitable strategy for yourself. Look, you don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to Norfolk FX Trader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. Again, we break through the trend line, but do we break this low? No, we don't. So we expect the market to continue higher. We do, we break out, break the structure again, make a new high. Once again, we break down, and then do we break this low? No, we continue up again, eventually make a new high here. That means we can drag this trend line all the way to this low. Now, when we actually see the market dropping through that trend line, that is the manipulation phase. So right here, we can see we actually went higher. We broke structure. We broke the structure high here to the upside. We then broke through the trend line once again. Did we break this low? We never broke this low. We went higher, made a double test here. Then we dropped through. And at this point, we can use this level here. We actually just broke through. This now confirms the trend collapse strategy. We've confirmed the reversal and we expect the market to continue to fall. So now once we see this breakout, we go back to price on the chart and we'll be looking for this breakout area here. Let me go closer into the chart now to the candles. I'd be looking for an area of supply. So I'd mark out my area of supply. I'd actually mark out my area of supply here in the market. That's my supply zone. Now we don't actually come back into the supply zone. We do come into area of imbalance, but right here, we failed to enter into the supply zone. This means that this supply zone will be used at a later point. Let's go back again to our line chart. We can now draw a new trend line from this high to downside. We can see we have a nice bounce here and a bounce here. We can draw it all the way down. At no point has the market yet broken out. We continue down. And here we can see the market broke to the upside. Now we can actually use this as our last bounce point where we can see the market's broken through. We broke structure here to the upside. Now, when drawing trend lines, you can see many traders drawing them differently. So what I'm saying is we see that I've just drawn this trend line like this. Some traders may draw their trend lines like this and say, okay, we broke out here, but look at this strategy. Did we break this high? No, the market continued to go lower. Then you can move your trend line to here. We then broke out here. Did we break out this high? No, we made an equal high. And then we went lower once again, and then you move your trend line to here, which is exactly the same place. Even when you draw your trend lines differently, the strategy will still continue to work. And again, we see a nice breakout here. What does that mean we're going to draw here? We're going to look to draw an area of demand. Now you can draw your demand zone. This is how I draw my zone. You can either draw it from this swing low, or you can use the low of that candlestick, which creates a higher swing low, which then continues on to break this previous structure. Either way is okay. Obviously, you're going to have a smaller area where you can look for the market to come into. You can see the market does come into this area of demand, and we have a reversal. Now you can look for a set and forget strategy style here. Same for this area of supply. And look what happens here. Look, market goes up, tests into that supply zone, and we have a reversal out. Back to the line chart once again. That is our trend collapse strategy here. The market from this point went up, we broke out, pulled back, continuation here, made a low, we broke the high, a new high, pulled back, higher low. That's the reversal strategy again. We continue up. So we can do the same thing again. Let's reverse that off. We can mark off from this low our new trend line. If we cross on the chart, mark this off, we've just broke that trend line. Does that mean we're going to reverse? But what do we have to see? We have to see a previous swing taken. We're not going to see this low taken, so the closest one is going to be this low here. Did it break the downside through it? No, we held. Now, even if you actually used this as your trend line, what do we see happen here? Market continues up. And then if you actually then draw another trend line and you use this as a trend line, now we can see a breakout to downside. What's going to leave here is an area of supply. But what I prefer to see is the major reversal points in the market. Is this a major reversal point? Not really. The major reversal point is going to be when we see the market breaking through this swing here. And that didn't happen, and we continued higher. Now, what we could look at here in the market, remove these areas, is the retracement. This is our retracement to downside, our retracement trend line. We've just broken to the upside. So we could look at this as a trend line. We're bouncing off, not using this swing high. But even if we use the trend lines we had it, this high here is now being broken. But if we're using from this high, we've broken it as well. What's that going to leave here? We go back to the price chart. That's going to leave another area of demand. So we now expect the market to continue up into perhaps this area of supply once again. But we do also have, like I said, an area of supply here. That supply is from the other reversal, this reversal. We broke this swing low, that's left an area of supply. This became a new trend to downside, which has now been broken to the upside, leaving a new area of demand. So we have supply above, demand below. That's how you can look at using this simple strategy to show you those reversals in the market. And they are great entries. Look at this. We had an entry here, nice drop away. We have an entry coming back into this demand zone. Look at the move back up. Even if you look at taking your profit target at this high, from here to here, a great risk to reward, especially if you look at a reversal entry on a lower time frame. Same here, we just fell short from that entry. Now we did go into the area of imbalance here and reverse went down. And look at this, the market went down to the previous low. So those two trades on the sells were great trades. If we look back in time, you can see again here, we failed to come into the area of supply. We gave a reversal here. This is too close for the market to come to because we've already bounced off it. Where's your next area? Next area is going to be here. The market does go to it. Now on a lower time frame, when looking for taking a reversal out of these areas, you're going to find a much higher risk to reward. And that's just understanding how to look for your trigger entry on those time frames. So this is how you can use the trend collapse strategy to simplify your trading and to find high probability trade entries. Now, if you want to learn more on that lower time frame entry using supply and demand, then check out my free trading strategy class right now.